Good evening, everybody. All right. I just want to quickly go straight to the point tonight because of our time. Okay. Basically, so all right, now there's something quickly I want to quickly explain to you. Okay. Everybody in class, okay. So let's dive into the subject of tonight. Now you discovered that basically there are three market structure that is tradable. Three market structure that is tradable. You have when the market is forming higher highs and higher lows. You know, the market is forming higher highs and higher lows, then you will see that we have higher high, Okay. Then you have higher lows. Then you have higher highs. Then you have the higher lows. Higher high. Then higher lows. And then we say this is an uptrend. Hop is an uptrend. Basically, this is an uptrend. So this is an uptrend, and then you have the other way around. Then we also have the downtrend. We have the downtrend when the market is forming lower highs and lower lows. So what that means is that, you know, this lower high is lower than this lower high. Then this is lower. Then this is lower, is lower than this. Is lower than this. And then the market is forming a downtrend. Now, what I want you to note tonight, that everywhere the market turns is a potential support and resistance. Potential support and resistance. Potential support and resistance. Everywhere the market turns is a potential support and resistance. It can be support, can be resistance, and those are the area that will be. That's the area you'll be focusing on. Okay, that in the future the price may react in those areas. Everywhere the market turns, you know, everywhere the market turns, the potential support and resistance in the future. So much so that the price can get there in the future and bounce back up, or price can actually, you know, price can actually do something like this. Come here, then come back, and then go down. It gets here again, it can move up a little, and it goes here to this side again. You see, that's how the market moves. It moves from zone to zone. That's just a simple word. Market move from zone to zone. Whether demand zone or supply zone, it moves from zone to zone. There's always a movement from one zone to another zone. Okay, so these are the areas that you be putting your mind to. You put in your mind to areas to be focusing your mind on. And of course, you know, but part of what I want to teach you tonight, two things I want to share with you tonight. The first thing is the support and resistance. How do you draw support and resistance? I've just told you how to draw support and resistance. Everywhere the market turns is a potential support and resistance in the future. Potential support and resistance. Potential support is a potential support, is a potential resistance. Even where the market turns, the time will come, you just got that market comes to this side, just like gold did some weeks back. Market comes to this side, and then it comes down, and it can move like that. It can now move to this side again. It can move to somewhere around here, okay, and turn back. It can turn back. It can turn back and begin to move higher and higher low. So this is how market, you know, operate sometimes, many times, or most of the times. Now, that support and resistance happens in the market. So you have market forming higher high, higher lows, higher high, higher lows. Now, this is a single from here to here is a single movement. A single movement from here to here is a single movement, and that's where the use of Fibonacci tools comes in. Fibonacci tools, that's where it comes in. It's a single movement. You only use Fibonacci retracement or use Fibonacci tools for a single movement. For a single movement, so what happens is you put the Fibonacci here. This will be 0, and this will be 100. This will be 100. So when you put a Fibonacci here, from here to here, you discover that somewhere around here, and then there are 3 points you'll be looking at in Fibonacci retracement level. You have 38, 30.2. Then for me, these are the 3 areas I'm always looking for. You have 50, then I have 61.8. 61.8. You have 61.8 here. These are the areas that I look for in Fibonacci. So you put when the market is forming uptrend, you put your 0, you draw from, you're always drawing from left to right. You're always drawing from left to right, never right to left. So you draw from the low to the high when the market is moving in an uptrend. When the market is moving in an uptrend, you are drawing from low to high. You're drawing from low to high. You're drawing like this. So this will be your starting point. So by the time you drop it at 100, then you'll be looking out for the retracement level of 30.2, 50, and 61.8. So you discover that here will be most likely 38.2, and then if you do it again from here to here, you have this will be 30.2. Somewhere around here will be 50, and then next to it will be 61.8. Then you have other ones like 76, 76 point, 76, 78.6, 78.6, 78.6. Then we have 88. We also have 88, 88, 88.6, 78.6, 88.6. But this, I usually don't really focus on this. I only focus on 38.2, 50, and then 61.8. These are the ones that I focus on. Okay, so I'll be looking at those retracement levels, especially when the market is trending. Please understand that Fibonacci retracement level, Fibonacci 2 is relevant in a trending market. Is relevant in a trending market. The same way trend line is relevant in a trending market, and moving average is relevant in a trending market. Fibonacci retracement level is also relevant when the market is trending. It is actually what we know is that what Fibonacci retracement is used for is to be able to speculate the end of a pullback, the end of a retracement. For example, if the market have an up movement like this, and then it begins to pull back, Now it can pull back at 38.2, 38, 30.2, or it can pull back like that, or come back here to 50, 50, 50, or it can also come back to it can come back to 61.8, 61.8. It can come back here. Okay, you can come back to that level and turn back. You can come back to that level and turn back. So, but if that is the case now, so now it is very, very interesting. One of the things you will do that will help you to make a lot of money is when you begin to when your Fibonacci retracement level coincides with your support and resistance, when your Fibonacci retracement level with your support and resistance, that will give you a confluence. That will give you a confluence. So let's say, for example, you have something like this. Let's do something on the board. Sorry for this. I decided to use this tool today. So you have this, then it's pulling back. Then you have this. Then on this one now, by the time you put your Fibonacci retracement here, you put your Fibonacci retracement layer to this place. Now, if you're 31.8, look at it now. I told you that everywhere the market turns back is a potential support and resistance, potential support or resistance in the near future. Now, imagine here, you draw your Fibonacci level, and at this point, it's giving you 61. Most likely, this will be 61.8 retracement level. 61.8 retracement level, and here now, you are seeing a pin bar. You are seeing a pin bar candle. You are seeing a pin bar candle. Here. You're seeing a pin bar candle here. Let me draw it again. Let me draw that pin bar. But this was not looking like a pin bar. Sorry, just bear with me. Just bear with me. You're seeing the pin bar. You're seeing a pin bar candle here. Number one, Fibonacci retracement level is giving you 61.8. Then you have a support and resistance. You have a support here. You have a resistance that's turned to support in this place. Now. Then you now have a pin bar. That's three indicators, three things are telling you to buy, because this 61.8 is telling you that this pullback is ending at 61.8, and then when you are seeing signal is ending back, first of all, what you'll be looking at is that this red candle, at this point now, you are seeing a green candle, and then you're looking at a resistance in this place. You are seeing a pin bar, and then that kind of a trade, you just enter your trade straight up like that. So now we have combined the support and resistance combined with Fibonacci retracement level on this chart now, and that is how you place trade. That's how you enter trade in the market. That's how you analyze the market. So support and resistance together with reversal candlesticks, then together with Fibonacci retracement level. I'd like us to quickly come to the chart and let's see how this works just in a few minutes. Let's get to class. Let me share. Oh boy. So let me share. Okay, so now this is gold now. This is good. I'm trying to look. Okay. All right, so I don't know whether you can see my screen now. Okay, so look at what I'm sharing with you now. There's this one single move. This is a single move. This is a single move. So the market moved from here to here. So I pull up my Fibonacci and I draw it from the beginning of that movement to the end of it. This will be 100. This is 0. It can also be 0 to 100. It doesn't matter. So this is from 100 to 0. And then I drop it. You discover that at 0.50, at 0.50, at 0.50, you discover that at 0.50 here, and then you can also see that Fibonacci retracement level is on 0.50. You can see it's on 0.50. You can see 0.50 here. And I told you these are the three numbers you're going to be looking at for. For me, I only look for these three numbers. Other people may have more than that. I only look for these three numbers: 30.2, 50, and 61.8. You can see at this place now, after that one big move, when you see the price is coming down, price started pulling back, you start to look for a Fibonacci 2, which is this. These are Fibonacci 2s. These are Fibonacci 2s. It's always somewhere around here. If you're using TradingView, it's also there by your left. So if you pick it from there now, just draw from that one swing, from the beginning of it to the end of it. When you start seeing that there's a pullback, the essence of Fibonacci retracement level is to know where the pullback will end, where the market will reverse back to the direction of the main trend, where the market will pull back, where the pullback will end, Did you see again? Did you see this thing again? So let's delete the first one that we did. I just did another one now. Now this is another beginning of a new move. A new move goes like this. See, from here to here. Pump. So I draw my Fibonacci from 100 to this place. From 100 to from 0 to 100. Okay, and you see where the market is turning back, 50 once again. Did you see? Market just turned back at 50 again. And then you will now see that on this 50, where the market is turning back, where the market is making this U-turn, it also coincides with this support. This is exactly what I'm teaching you tonight, and it's amazing. It's very amazing. See, don't mind this a little bit dark, my inverter just went off now. So, but then I don't want to quickly go and put it on. Now, so this is what happened now. You see, Fibonacci trailing level, this is 50, at retracement level 50, then it coincides with a support, a resistant turn support. This is resistant. This was resistant in the past, and then in the future it became a support. So the price pulled back to that support, and then at the same time is at my 50. That is exactly what I'm teaching you this. That's the essence of this class tonight. Those are the two things I just want to teach you: how to combine support and resistance with Fibonacci level, and then look at what happened there. Look at this candle. This candle is one of the candles I actually wanted to teach you today. It is called piercing candle. It's also one of the most powerful candles you can ever imagine. It is called piercing candle. And I love this candle so much. Piercing candle, look at it. The same way I taught you pin bar and shooting star. Now, there are two. For example, you see bullish engulfing, bearish engulfing. Then you see pin bar and shooting star. Now, you have piercing candle and dark cloud. I call it dark cloud cover. Dark cloud, people call it dark cloud candle. I call it dark cloud cover. They are also opposites. Bullish engulfing, opposite, bearish engulfing. Pin bar, opposite, shooting star. Then piercing candle, the one on my screen right now, and dark cloud cover. There are candles like that, because what means is that the piercing candle is a bullish reversal candle. The dark cloud cover is the bearish reversal candle. So the bullish reversal, just like pin bar is a bullish reversal candle, shooting star is a bearish reversal candle. So the opposite of piercing candle is called dark cloud cover. And those are the things that you note in your mind. Just like just a moment ago, I was saying you have to bring the pieces together to make a whole. These are the things you bring together, little here, and then, for example, we have done trend line, we have done. Look at where we are combining three things together now. We are combining the support and resistance with Fibonacci retracement level, then with reversal candlesticks. The reversal candlestick right now. So what makes this candle a piercing candle? You discover that this green candle closes beyond the midpoint of this red candle. Don't worry, I think it's actually on my slide. Actually on my slide, I wish I can teach you, but tonight what I intend to teach you is how to combine support and resistance level with Fibonacci retracement level, and then you can mix it up with candlestick reversal, um, candlesticks reversal pattern. Okay, let's see if you can get another thing here. Let's see if you can get another thing. Beautiful, 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 beautiful. I love this. I love this. Look at it now. I just draw. I told you that on one single move, you should draw your Fibonacci on one single move. This is a single move. This is a single move. A single move. This is a single move. Look at it. Look at this single move. So I pick my Fibonacci tools from here, and I'm drawing it from here to this place. That is from 100 to 0, and then it stops here. And look at the wipe. So because I started seeing a pullback here now, and look at where it ends, 38.2. Did you see 38.2? I like this. I like this. 38.2. 38.2. And that 38.2 is here. And then on this spot now is giving me a bearish engulfing. Bearish engulfing. Look at how we're combining it now. Now let's see if there's any support and resistance in that on that side. Did you see? Did you see? Did you see? Did you see? Did you see that there is this? Check it. You see? Oh, sorry. Oh, I need to draw that Fibonacci again. I'm drawing it from here to this place. Okay. Okay, so we say let's draw the resistance, support and resistance. You discover that something is happening here and something is happening here too. And then you see that the thing is actually at the very, look at it here. There is a support here, there is a resistance here. And then at that same spot in the future, we are seeing Fibonacci retracement of 38.2. And I told you that the 3 points that you see now, I've deleted every other point on my Fibonacci. I don't want to see that. I only want to see 30.2, 50, and 61.8. So you can see on 30.2, market actually reversed. And at the point where it's reversing, I'm seeing a bearish reversal candle. I'm seeing a bearish reversal candlestick. Sorry, bearish engulfing. This is a bearish engulfing. I think I've taught you bearish engulfing in your class. I've taught you engulfing candlesticks. So you can see a bearish engulfing here, and then you can see that there's a support here in the past, and then there was a resistance here in the past, and then so this is what we call confluence. This is what we call confluence. When you have multiple signals, telling you the same thing, it is called confluence. Confluence is one of the keys that make you very profitable in the market. Confluence. It means when you have more than one reasons to enter a trade. For example, the support and resistance is asking me to enter a trade, like a pullback. This thing just look like a pullback, then a movement that it traces back into a resistance, and then it wants to continue. So at this point now, you should be able to enter a sell, and then you put your take profit at this swing just before the close of this movement. And then the same thing is also happening in the future again. You see the market is also respecting that zone one more time. This is how it works. This is how Fibonacci retracement is used in conjunction with support and resistance. Now we have come again. You've come again. Come again. You can see here now. You can see that at point 38 here. Look at 61.8. Look at 61.8. Look at it there. 61.8. At level 61.8, market is literally turning. Market is literally turning in a different, the pullback was literally ending, and then it was remarkable to enter a trade there. You can see here now. You can see this is like, sorry, this is 61.8 now. This is 61.8. Market is turning back at that zone, and then you can see, and then you can also see that in the past we have a resistance. We have this swing. We have this resistance here, and if you look at it also in the past, we have this support in this place, and then at this point now we have doji here. We have doji here. This is common doji. This is the common doji. This is normal. This is a common doji. See, common doji is happening at that same zone of 61.8. Common doji is happening. Then support and resistance is there, and then you have Fibonacci retracement of 61.8 at that same zone. Three things telling you the same thing. That is confluence, and this is what I just want to share with you tonight. I like it to the assignment I'm giving you tonight is that you get back to your chart and see where you have these three confluence saying the same thing, where your Fibonacci retracement is giving you either 30.2, 61.8, or 50, and then you have it coinciding with support and resistance, and then you will name the reversal candlesticks that you find at that same spot. You find at that same spot. You see the reversal candle you find at that same spot. So that's the assignment for tonight, and you're going to give me 5 examples of that. 5 examples of that, where you have the retracement, Fibonacci retracement level 61.8 or 50 or 38.2, and then it must coincide with the support or resistance, and it also must coincide with, and then you must have you must name the reversal candle at that same spot. Those are 3 things telling you the same thing. Giving you a signal to enter a trade. Okay, I'm going to be ending the class here. If I have my chance, I'll give you I'll record another video, and if not, we'll meet in class again tomorrow. Thank you and God bless. If you understand what we shared tonight, please just type 2 in the comment section. If you understand what I just shared with you tonight, type 2 in the comment section. Type 2 in the comment section if you understand what I just shared with you tonight. And if you want me to share it again, just let me know. If you understand what we shared tonight in class, please just type 2 in the comment section. If you understand what we shared tonight, just type 2 in the comment section. All right, it's beautiful. So let's end the class here. I'll see you guys again tomorrow. Thank you.